Well, I mean, it may well be able to deliver the number of hikes priced in, but one of the keenest and most difficult debates in markets is, what is the neutral rate? I.e., at what point does policy become restrictive? And there's a lot of uncertainty about that. It may well be higher than originally anticipated, given the amount of fiscal transfers that we've seen and the sound shape of both consumer and corporate balance sheets. But to further bolster the view that we think policy will remain generous, not really of the view that the Fed will be keen to deliver all the rate hikes that are priced into markets currently. Again, I know inflationary debates rage, but and inflation is likely to settle at a number higher than we've seen in the past. But we think inflationary pressures should ease a little bit from here. The exact timing is tricky, of course, but supply side issues resolving themselves, consumer trends switching from goods to services. We've got these base effects issues, and ultimately, the Fed is concerned with the long-term inflationary picture, and that still seems pretty benign according to bond markets at least. So I don't think the Fed will see the need to deliver the 6 or 7 hikes that are currently priced in.
Well, Ben, certainly seems like a fair assessment that the inflation debate rages on. There's also, of course, the ongoing growth debate and to what extent consumers, for example, and households will be impacted by higher inflation. You've got the cost of living crisis front and center here in the UK. Meanwhile, stateside and in other parts of the world, you're seeing the consumers squeeze as prices rise. How would you characterize the strength of the consumer right now?
Well, I'd say it's a bit of a sort of score draw, if you like, this year. I mean, you're absolutely right. This cost of living crisis is, front and centre, both here and in the States, and and increasingly around the world. And you sort of think that sort of politicised element to it, the amount that it's in the media, is maybe having a marginal impact on central banks. Now, they've got to be seen to be dealing with this stuff. It's really visceral. Isn't it? But ultimately, the starting position for consumers is one of, really decent is one of decent health. And so, whilst the incremental spending power of consumers may be weakening, the starting position is still pretty sound. And also, there is, pent up demand, maybe not necessarily for the type of goods that were purchased through the pandemic, but for more service and leisure type spend. There will be, I think, evidence of pent-up demand. So I think the consumer is overall being squeezed, but still in a good shape based on their healthy starting position.